Good morning.
There is an accident down the road.
So where can I take you today?
Doesn't matter what business you go into, you've got to have a business plan. And the business plan can be fairly brief, but it's got to demonstrate that you've asked the tough questions and given yourself the sufficient answers to feel confident that the business is going to be successful. We'll come address some of those questions, those issues a little bit later, but in terms of business failure, let's talk about that to start with. Small business failure in Australia is pretty high. A study done just a few years ago of 14,000 businesses that started up 10 years previous to that study starting, only 900 survived out of 14,000. In the first year, over 30% disappeared. In the second year, 46% disappeared out of the marketplace. And a lot of the reasons for their failure in the business was their lack of planning.
Everybody that comes into the industry should be advised by experts. It's not something that you can just sit down at the table at home and say, right, this is what I'm going to do. Because the people that have been in the industry for many years are the best to listen to, because they can tell you how to plan. And it's imperative that they formulate a plan for themselves and get it right.
Provision for your loan repayments for the original purchase of the business. Provision for constant renewal of the plant equipment, the motor car. Provision for renewal of the lesser items, because they too wear out, radios, computers and other hardware that you use. Also provision for the fact that we live in an age of expanding technology. Who knows what the boffins are going to come up with next that we'll have to incorporate into our service delivery or die.
It's a matter of accepting the fact it's something we all live with, and we're part of the system, so we've got to pay our tax. Now, the Taxation Department recognise this and have set up liaison officers. Their sole duty is to help taxi drivers.
The people that run the taxi squad at the Taxation Department are the most helpful people. They will go out of their way to make life as easy as they can for you, provided you're honest with them. You've got to be upfront. You can ring them at any time and get advice from them, and that advice is absolutely free.
The law of our land says that we must pay tax, and the tax office, the ATO, is that institution which implements that law. And in doing so, they attempt to service us, the tax-paying public. So yes, they give assistance. It's impartial, and it's quite comprehensive. You can ring them up and you can say, look, my name is so-and-so, I'm doing this, my problems are that, what should I do? And they'll tell you, okay? However, having said that, naturally enough, they're going to interpret the system to the letter of the law. And while no self-respecting cab driver is going to attempt to flout the law, you could almost say that it's any Australian citizen's duty to only pay the tax that he has to pay. You don't want to pay what you don't have to pay. So yes, they'll give you advice, yes, they'll give you help, but if you're going to do this professionally, you go and see your accountant, some trusted accountant who is duly accredited and appointed to deal with taxation matters, and you consult him and you pay him a fee privately to get the facts that will best benefit you.
But starting out, I'd recommend that you have a very good accountant who is aware of the issues of small business and who can give you advice. And the important thing about advice is that they can give you advice now for the future rather than give you advice at the end of the financial period and say, well, this is what you did for the last 12 months. That helps to an extent, but it's much better if they can think ahead for you and say, well, look, we understand what the taxi business is like as an accountant. These are the sorts of ratios or performance measures that you should be achieving. And if you're not achieving these, there's something wrong. So let's work through it. So an accountant is an advisor, and they should be used for that purpose to seek advice, rather than just relying on seeing an accountant once a year to do your tax. I mean, that's not using an accountant for the value they can provide.
Tax stamps are something that can help you to provide for the end of the financial year pitfall that others do fall into, because if you buy your tax stamps regularly, you've got them in the book, they are there, they're an insurance, they have covered you for that end of year financial drain that other people face, as against the provisional tax, which is something that you look at when you're an owner of a cab, because the taxation department has told us that if you buy tax stamps at all during the year, it eliminates the necessity for provisional tax.
What happens with provisional tax is that after the first year of being self-employed, the government actually assesses you on the next year as well, so you're actually paying the tax on the next year as well. But what you find is if you start out setting aside a third, if you do that every week or every month as you go, you've actually got the money there as you go to actually pay the provisional tax whenever it comes. So you're actually setting it aside as you go. Where you get into trouble is where you've got through the first year, you've basically spent the money that you've earned, you haven't set aside even enough money for the tax in the current year, and then they assess you on the tax they reckon you should be paying for the next year, and then you get into big trouble.
It's a very much a personal issue whether you become incorporated, and set up a company and pay company tax, or whether you just want to remain a sole trader. If you remain a sole trader, provisional tax has to be paid in the year that the income is earned, and if you're outside the parameters in terms of 20% outside either way in terms of your assessment of what you think you're going to earn, penalties apply. Okay, so you've got to be spot on in terms of your revenue forecasts. An alternative is to think about incorporation. The costs aren't that high. You're looking at maybe $1,000 to set up a company, and there are certainly some costs in preparing the company returns. But tax is only payable after the year that the income is earned, so you have a far better fix on what your costs are.
I guess in deciding whether you, how committed you are to owning a cab and running your own business, really depends a bit on the sort of risks you want to take and are prepared to take. Often, I guess it all comes down to risk and return. I mean, if you're prepared to take a big risk and sort of put your house on the line, then the returns are there. But as I said before, you can't really just assume that because you're a good driver that you're going to run a business well. So I'd be, before I'd be, putting my house on the line, I'd be sort of making decisions about thinking through the process pretty closely, and doing my cash flow, speaking to an accountant, speaking to people from the small business groups and things like that.
Banks are really all they're after is to minimise the risk of someone going broke. If you recall those stats I gave you earlier, 14,000 businesses after 10 years, only less than 900 had survived. You'd understand why the banks get a bit nervous about small business. It comes back to experience, a certain degree of management training and management planning, keeping control of costs, not excessive drawings. One of the ratios that's fairly common that the banks do look for, and every bank is different, but one of the things is that you should have at least 1-to-1 cover. In other words, debt to equity. Your equity in the business has got to match the debt. Banks would prefer 2-to-1. In other words, you as an individual have twice as much in the business as you're asking to borrow.
Most do go to credit situation, and as long as you've kept good financial records over the period you've driven and can prove to your friendly bank manager that you can make money at it, you'll have no trouble getting finance via taxi.
And the banks are a good place to start to look for money, but the situation has changed dramatically from, say, 5 or 10 years ago, where you'd have simply gone along to your bank and done a deal with your bank. What people are doing these days, they're actually saying, going along to their bank, doing a deal with their bank, getting their best deal, and then shopping it around.
Never a lender or a borrower be. In our industry, that really takes top precedence. If you lend money, prepare to lose it, just like going to the casino.
I suppose I bought a taxi to as an investment. They were always looked upon as an investment, sort of a superannuation for later on. Hopefully it can be that. I can always, when I get older, I'm too old to drive in myself even, I can operate it with drivers. You can lease them out, you can do all sorts of things like that. You can still attain the asset there, you know, and hopefully a good capital gain, and you have something for your retirement.
When you get into the small business area, you realise you've got to start to think about looking after your own superannuation, looking after your own future. And your income is not as set as an employee. So you've really got to say, well, okay, well, you know, that's what I talked about before, about making a decision about your future, deciding where you want to be in 5-10 years' time, working out what sort of income levels you can work on. I mean, the sort of things you'd be doing is making a budget of your income that you need for your regular needs, feeding yourself and your kids, sending your kids to school, those sort of things, and then setting aside an amount for taxation, and then also setting aside an amount for superannuation and for your retirement, because I guess we all know and expect that the government's not going to be able to keep us when we get to 65, and there's not going to be the money there for people to retire comfortably.
A lot of small businesses, business people, think that their nest egg is in their business. There's an assumption that the price of taxis will always increase. But what happens if that's not the case? What happens if it's wrong?
Well, I think it's the decision about whether you go into a superannuation fund or whether you go into, say, property is a couple of aspects to that. I guess in superannuation, the choice is, superannuation is really a vehicle rather than the end product of property or not. There's any number of superannuation funds in Australia, which we'll call, I guess, for want of another name, do-it-yourself superannuation funds, where actually people do invest in property through their superannuation fund vehicle. So it really comes down to that sort of deciding to put money into superannuation. Initially, you'd probably go into, with smaller amounts of money, you'd go into a product put out by a life insurance office or a bank, where you might put away $5,000, $10,000 a year or something like that into superannuation. But as that money builds up, it gets to a point where you can actually set up your own superannuation fund and then invest in property and those other things if you want to. So the choice about superannuation is really not about what assets to invest in, whether it's property or shares or those sorts of things, but really about the vehicle. And it's a tax advantage saving vehicle for people, and that's the real reason for going into superannuation. And the other decision to make about that, the second aspect of that, is that when you're making investment decisions, you should be really looking at what other assets you've got. And a lot of people have got significant amounts of property already in their own home. I guess in the financial planning area, we look at diversification and reduction of risk because of diversification. So if you've got one property and you go and buy another property, you're actually putting all your eggs in that one property basket.
Well, look at certainly the value, projecting the value of the business or the licence if you can, but bear in mind that the value could also decrease, could soften. It doesn't always have to go up. And have some alternative strategies in place too. You know, income-producing rental properties. They work well with family discretionary trusts because you can see them, you can maintain them if you need to, you can sell them if you want to.